By the early 1980s, Richard Dennis had turned a stake of a few $100s into a personal fortune worth over $100 million. His trading partner, William Eckhardt, didn't think any of that could be taught. Eckhardt believed Dennis's edge was something he was simply born with. Instinct, not something you could hand to a total stranger in a 2-week course. Dennis disagreed, so he decided to prove it with real money. He placed ads in the Wall Street Journal, Barron's, and the New York Times, looking for people to train as traders. He wasn't hiring resume. Among the thousands who applied were a professional blackjack player and a fantasy game designer. Dennis narrowed the group down to 23 recruits, trained across 2 separate classes a year apart, one in December 1983, another in December 1984. The first class alone is sometimes cited on its own as just 13 or 14, which is why the number varies depending on the source you read. Most of them had never placed a single trade in their life. Dennis's theory was specific. His success wasn't a gift. It was a process, a repeatable set of rules for when to enter a trade, when to size up, and when to get out. If that was true, then the rules were the actual edge, not the person running them. So over 2 weeks, he taught his recruits everything. Not a philosophy or a mindset, but an actual mechanical system. They became known as the Turtles, a reference to turtle farms Dennis had visited in Singapore, where he famously declared, "We're going to grow traders just like they grow turtles." Then he funded their accounts with real money, reportedly between $250,000 and $2 million each, and let them trade. This is what he gave them: entries. 2 versions of the same idea, a faster 20-day breakout and a slower, more conservative 55-day breakout. If the price broke above the recent high, you bought. If it broke below the recent low, you sold short. There were no opinions about where the market was supposed to go, just the breakout. Position sizing. Every trade was sized based on how volatile that specific market was, not on gut feeling and not on conviction. More volatile markets got smaller positions. Calmer markets got bigger ones. The goal was to risk roughly the same amount, no matter what you were trading. Risk control. No single trade could risk more than about 1% of the account. Pyramiding. If a trade started working, they were allowed to add to it in small increments as the trend extended, but always with the risk capped. The part almost nobody expects. The Turtles were wrong on more than half of their individual trades. Their win rate hovered somewhere around 35 to 40%. The system didn't work because they were right more often. It worked because when they were right, they let it run, and when they were wrong, they got out fast and small. Within about 5 years, this group of complete beginners had, by the most primary account available, a book written by one of the Turtles himself, generated more than $100 million in trading profits, averaging over 80% a year. Other retellings put the total closer to $175 million. The lower figure is the one that traces back to an actual turtle. The higher one is just the version that spread further online. The turtle who wrote that account was Curtis Faith, who joined at just 19 years old with no trading background at all, the youngest in the group by far. He traded the largest account of anyone there, and by his own account, personally made more than $30 million in just over 4 years. Another turtle, Liz Chaval, went on to found her own trading firm. One detail makes this more than a rags to riches story, and it comes from Faith himself. During the very first month of live trading, he was the only one in the entire group who stuck to the rules exactly as written. Same system, same training, same starting capital, and even in month 1, most of the group had already started deviating from it. Eckhardt was betting that trading success was a gift, something you either had or you didn't. He lost that bet because the rules turned out to be teachable, and Dennis proved it. But the part of the story people usually skip is the more interesting one. Even with the exact same rules and the exact same money, not everyone who got them actually followed them. What separated the Turtles wasn't talent, but whether they could run the process in the exact moment their gut screamed at them to do something else. It turns out most people couldn't do it, even when someone handed them the entire system. That's the difference discipline makes.